So are you as confident as Jennifer Westacott is?
Yeah, look, it's the problem the government has chosen to address is unemployment. You know, we've got the most ambitious unemployment target any government has tried for decades. That costs a lot of money. They're spending on aged care. Aged care creates jobs. The combination works. The hard bit might be paying for some of this down the track.
Okay, well, we'll get to that in a second, but is that what you are most worried about?
Unemployment, driving that down, grand to see, and yes, these policies will do it.
Okay, so how are we going to pay the bill?
That is genuinely the trick. I mean, the easy bit is to announce the new stuff and you get the applause, and so you should. Paying the bill will be tricky. The great news is, you know, interest rates are really low. Paying the bill is far from urgent. We should worry about COVID and unemployment now first. But yeah, a difficult conversation down the track.
It'd take a long time to do that. I mean, this is something our kids are going to have to deal with, right?
Yeah. To be fair, really low interest rates is what COVID is leaving behind. Not a lot of unemployment. It does make it easier to do exactly what the government is doing.
Last time we had a conversation, you said basically the government's got to find about $40 billion a year. Is that still the case? Is that a bit more now? Okay, what's the latest with your opinion about that?
So it's comfortably over $50 billion a year to get the budget back to balance.
That's what you need?
Yeah, and you do eventually want a stronger budget. Having a strong budget helped us fight off, you know, COVID, things like JobKeeper, expensive, but we were well positioned to do it. Again, you don't need to do it overnight. You certainly shouldn't be trying to do it now, but over time, it's worth fighting.
And that may increase over time too. I mean, we've already gone from 40 to 50 billion in what, a week? Yeah.
Because, right, the government is spending on things that it should spend on, aged care and the like. But yeah, a tricky conversation. The nation isn't having it. And it's fine not to have it now, but let's not forget at some stage down the track we need it.
So tax rises, cuts, will that have to do it?
And it's the only way to do it. And the politics of that is horrendous. Australia, you know, the last solid attempt at budget repair was that 2014 budget, and it didn't go well.
Well, that's not going to be a problem for this government, though. It's going to have to be for one down the track, right?
Oh, yes. You know, there's at least one election and maybe even two.
So we're looking at about, we've got a debt of $1 to $1.2 trillion at the moment. Is that sustainable?
It is. Right. The key isn't the debt. The key is the cost of the debt. And fascinating thing, all right, every single year the government is forecasting this year, the next 4 years, the cost of debt relative to Australian national income lower than it was before COVID hit. That's all about the impact of low interest. You know, sure, debt is up, but interest rates are so spectacularly down, that does the magic.
Wage growth also an issue for at least a few more years. Does that mean it's going to be tough for people to get pay rises?
Yeah. Now, the last year, the government forecast, 4 years from now, they're saying wage growth will almost be back at 3%. Now, that's a double. It's less than 1.5% now, but it's going to be a slow. You have to get unemployment down. You have to get underemployment down. You have to have a whole bunch of wage negotiations with employers and so on. It'll take years.
Migration too. I mean, that's something that is a negative for us. It's at zero. It's at zero until we can open up those borders, which, you know, I kind of agree with the government in terms of it saying, how can you predict what's going on at the moment? It may well be into 2023 before we can do that.
Yeah, and those closed borders are hurting. They're not hurting as badly as they might. All the Australians stuck here have to spend here. That's an offset.
Tourism is going to feel some more pain for a while because of that.
Yeah, and if there aren't many losers in this budget, it's designed not to have many losers at all. But if your jobs are connected to borders, right? If you're Cairns and Port Douglas and you need the tourists, if you're a university and the students. If you're a construction sector and you're after the migrants and so on, it's going to be a long time between drinks.
Yeah, and that would energise the argument, and I've put this to a few people today, about building quarantine facilities beyond what we've got, because that would enable things to speed up. You'd be able to speed up migration. You'd be able to get the international students in with 2 weeks in quarantine, and then they can be here and do what they need to do.
You bet. Our best investments, vaccines, track and trace, better quarantine, the obvious things.
Inflation is an issue that people are getting concerned about in the American market at the moment. Real concerns about it overheating because of all the money that's going into it. Do you have those concerns about Australia with all the money that's going into our economy at the moment?
No. Look, in underlying terms, you know, some things like petrol prices have bounced back up, but in underlying terms, inflation still really low.
Yeah.
You will know inflation is going to rise because you'll see it first in wages. And as the government says, and I'd agree with it, that's really some years away.
Okay, years away before we worry about that overheating. Chris Richardson, always good to get your thoughts. Talk to you again soon.